Welcome, welcome, guys. My name's Kyle Gilmore. I'm a realtor with Your Castle Realty, and I wanted to introduce you to Asa Jenkins. He's a mortgage officer here with Fairway Independent Mortgage, and he's got a bunch of years of experience. So I figured, why not sit down and talk to you about some of the things buyers and consumers should know about owning a home and purchasing a home. So introduce yourself.
Right. Well, thank you for letting me come in with
Mm-hmm.
on this. Like I said, my name's Asa Jenkins with Fairway Independent Mortgage. I've been in the business this past November made 30 years. I've worked with a lot of different types of buyers and consumers, from first-time home buyers to investors. I'm licensed in the state of Colorado, and enjoy doing what I'm doing.
Welcome, welcome, welcome. Glad to have you here.
Thank you.
I figure you got a lot of experience, a lot of things that I should know, people should know, consumers should know. And one of the first things that I feel like a lot of people are always interested in is what's your expectations of rates and where the market's going to be in the next year or so.
Well, as you know, a week ago from this past Sunday, the Fed chairman was on 60 Minutes, and just based on his conversations, we could see some rate cuts coming here during the spring, early summer. He's still a little hesitant about inflation right now, but is it going to be drastic cuts? I don't think so. We may see sometime by the end of June, maybe anywhere from a half to three quarters of interest rate cut.
And where are we at currently as of today?
As of today, we're probably right now, depending on your credit,
Mm-hmm.
you're probably somewhere right around 6.5 to 6.5%.
Mm-hmm.
Sorry
Mm-hmm.
about that.
So ideally, I think the lowest, in my opinion, you can correct me too. The lowest I would expect would be somewhere around 5.75 to 6%, probably in this year. Or how does that
Yes,
sound?
you hit the nail on the head. I don't think the wheels. I think the days of the 3% and the 3.5% are long gone.
Right, right.
But once again, the average interest rate over, if you look at it in the last 30 years, is right around 7%.
Mm-hmm.
So we're still with good rates as we speak right now. They will get better.
Mm-hmm.
We just got to keep our fingers crossed that we can get more inventory here.
Right, right. And I think the thing we've talked about a bunch of times too, as well, is that the purchase price is a little bit more important than the physical rate itself. The rate to me reminds me of like sticker shock when you're looking at a car. That like, oh, that looks terrible. That's way too high. But at the end of the day, it's more about the purchase price being a little bit too high for you, right? Or
Right. Well, the thing is, more than anything, and as you know, as a real estate agent, you as a consumer have to be comfortable with the house you're purchasing.
mm-hmm.
If you like the house, then at that time, then we discuss the monthly payments on that.
Mm-hmm.
And what I mean by that, yes, you should be pre-approved. There's no doubt about it. But if you're looking in between a range of, let's say, you're pre-approved at 450 and you're looking at 400 to 425, consult with me, see what your monthly payments is, because I can always pull up the taxes and insurance. Insurance will still estimate,
Mm-hmm.
and we give you a good estimate of what the monthly payment will be.
Mm-hmm.
So you want to kind of want to match the house and your monthly payment,
And
not as much as the rate.
before we go too far, can you talk to people what about pre-approval is and kind of like what information you're asking for and the value of it?
Okay, the two things that you hear is either pre-qualification or pre-approval.
Mm-hmm.
What pre-qualification is basically a loan officer looking at the credit report and basically, in his opinion, saying that this person qualifies. Now, when you do a pre-approval, what we do here at Fairway, we collect the pay stubs, bank statements, tax returns. We run desktop underwriting. And if we get a desktop underwriting, that's an approval, but we take it one step farther. So we then submit that file directly to our underwriters to confirm what we've already put into the system.
Mm-hmm.
And then we at that point in time, have a true pre-approval.
Mm-hmm.
That pre-approval process can probably, if we have all the documents in hand, we can probably have that done within an 8-day period.
Nice, nice.
Yeah.
And like the value of having your pre-qualification ahead of shopping, right?
Oh, huge. And the reason why is if there's two buyers looking at the same house, the one buyer is pre-qualified
Mm-hmm.
and basically saying to the seller, I've had my loan officer look at everything, but then so I'm pre-qualified. But if my client walks in with a pre-approval, my client then can turn around and say, not only am I pre-approved, but I can close faster than the person who is pre-qualified because it may take him 30 days, where now that I'm pre-approved, I can do it as as low as 3 weeks.
And you've already addressed all the obstacles ahead of time too at that point.
Absolutely. The only obstacles that could hinder the process would be title and appraisal.
I feel. And what kind of fees do you feel like are important for consumers to know about ahead of purchasing a home? Right.
Excellent question. The first and foremost is the down payment,
Mm-hmm.
and the down payment can vary as low as 3% on the minimum side. I'm saying as low as 3% or 3.5% or 5% if we go conventional.
Mm-hmm.
Obviously, you can put down as much as you want to.
Yeah.
The more you put down, the less that your monthly payment will be.
Mm-hmm. And also, didn't you tell me that the reason you got into the industry is because you thought you had to put 20% down every time?
Funny story. Yes, it is. When I purchased my first home, now I want to throw that out there as well. I bought it in 1987 for $87,000.
Nice.
And my interest rate was 12.49.
12.49%. Isn't that crazy? Double what we're talking about now.
And it was a great rate at the time.
Mm-hmm.
Well, my neighbor at that time was a real estate agent, and we were having a conversation about the community and the neighborhood. And I told him what I did. He told me he was a real estate agent. And I told him I put 20% down. And he said, "Why? This is not going to be your forever home." I said, "You're right. But I was always told you had to put 20% down." He says, "No, you only need to put the minimum is either 3.5% or 5%.
Mm-hmm. Mm-hmm.
So he was the one that actually got me into the business.
Nice.
And the rest is history.
Love that, love that, love that. And since we're talking about down payment, what are some financial tools that people can use? Like one of the things that I like to recommend to people is having a high yield savings account to use towards your down payment, saving your money for next year, 2 years, or whatever makes the most sense.
That, or if you have a 401k, you can actually, some cases, you can what they call a hardship, and you can actually take the money out of your 401k. Some people can also borrow against their 401k. And there's also down payment assistance programs.
Mm-hmm. And what down payment assistance programs does Fairway provide?
There's a plethora of them.
Yeah.
We use a lot of CHAFA.
Mm-hmm.
Actually, we're the #1 CHAFA lender in the state of Colorado.
That's awesome.
We use Aurora Hope, CHAC, Adams County Bond Program, Jefferson County Bond Program. So there's several programs out there. What I like to do is mesh the client, the house, to the down payment assistance program.
So do you recommend that consumers look up down payment assistance programs before they come to you, or do you think it's better to come to you first, kind of figure out what you're looking for? It makes the most sense.
There's never not enough education when it comes to purchasing a home. So what they want to go out and look at what the down payment assistance programs are, that's great. Then I will then hone them in on what the details of each of one of those programs. Some programs you have to take some kind of educational class, for some homebuyers class. Mm-hmm. Some do not require that. Some have specific homebuyers classes you have to take. Mm-hmm. So once again, it's nice for them to know what they are, but then let's talk and see what's the best program for you.
And what type of qualifications do they typically have? Like the amount that you're putting down, or like a specific credit score, or like I know Metro DPA, they want you to have lived in a specific area first? Or
that's an excellent question. Each program is different. They have income limits. Like I'll throw out there, for example, with Champa will go as high as $160,000 combined household income, whereas something like Aurora Hope or something like that may only be $70,000. That's why I say, once again, let's marry the program with you and your home. Mm-hmm. And they also vary in how much money they give you. Mm-hmm. CHAPA will give you up to 4%. Some down payment assistance program have a hard figure of $10,000 or $15,000. Mm-hmm. So that's why I say, let's talk.
Yeah. And with your experience, credit scores matter, of course, right?
Oh, absolutely.
But do you feel like credit monitoring services help, or credit repair services? Like, do you guys provide any services along that line?
Here at Fairway, we used to have a program called Credit Analysis Department. Mm-hmm. Me personally, I review your credit report. I've been in the business long enough to understand what you should and should not do. Mm-hmm. For example, I've seen people where they have the scores at like 580, 620, and they say, well, I'll pay off all my collections. And I'll say, no, don't pay them off. Mm-hmm. Because A, you're regenerating an old debt, which will actually, by you paying it off, will drop your credit scores. Mm-hmm. let's focus on your credit card usage.
Mm-hmm.
You should always try to keep your credit card usage down to a third of your buying power.
Mm-hmm.
So if you got a buying limit of $300, you should not spend more than $100 a month, and pay it down to $10 each month, and your scores will go up.
Nice, nice.
Yeah.
Okay. Aside from that, what other financial habits do you think are valuable?
Oh, savings. And what I actually tell my clients, if you haven't set it up already, have a direct withdrawal from your payroll, because that's money that you're not seeing, and you can establish your money for your down payment and closing costs. That's the best way. You're contributing to a 401k. Once again, like I said, you can probably do a hard case to take that money out, or you can take a loan against that. But yes, saving anywhere from 5 to 10% of your income on a bi-weekly or monthly basis will get you started in the right direction.
Okay. Do you recommend, since we're talking about taking money out, HELOCs or like reverse mortgages? Like, what are your thoughts on
Oh,
those?
we do reverse mortgages as well as HELOCs as well. Now, those are for people who are already established. Well, with the HELOC, who are established in their existing home. Or if they got a home that they're selling, that can get a little tricky, because now you got to pay that debt off now too, which reduces the amount of money that you're getting for your down payment on your new home. On a reverse mortgage, if you're talking age, obviously it was somewhere in the age of 62, and you can also purchase a home with a reverse mortgage.
You could purchase a home with a reverse mortgage.
Absolutely.
Wow.
Basically what it is, let's say hypothetically, I'm using round numbers, so don't quote me, but let's say you sold your house and you got $300,000, and if you're, let's say, the age of 70, you could actually purchase a home somewhere around 625 to 650. You never have to make a monthly payment, but you still have to pay your taxes and your insurance.
Nice. That's awesome. It's a great program available, and not enough people talk about that.
Absolutely, right? Especially for seniors who want to downsize. They got, now that all the kids are out of the house, and they just need a little 2-bedroom townhome or a condo. That reverse mortgage is a great way to go.
Nice. And also, since you've been here for so many years, can you also speak to equity and like why it's important to buy now or buy something smaller and then flip that into something bigger over time?
And once again, I'll use myself as an example. My recent home I purchased 10 years ago. I got it for a steal. I won't lie, but I got it for like $170,000.
What's a steal?
It was a unique program. Fast forward today, that home is worth $550,000. And basically, I haven't used that equity to pay off debts down the road, stuff like that. Or, once again, like you said, take that equity and purchase now your dream home.
And can you explain equity too as well, just to kind of like a more of a elementary level? Because like the way I like to explain it is that buying a home is like having another savings account for your money.
And that's absolutely correct. It is. It's the best way in the United States today to grow your money. By purchasing that home. Let's say you purchase it, like I said, for $300,000, and a year or two it might be worth $325,000. Unfortunate part is, you'll have to get a loan if you just want the equity. But if you sell the house, now you have $25,000 more, plus whatever you paid off on your monthly payments to buy your next home.
And that's how you do the 20% the next time.
Absolutely.
You know, if you want to make your payment a little bit smaller.
Absolutely.
Okay. Any questions you have for me? What are you thinking?
Mike, what I'd like to talk about a little bit here is first-time home buyers. I love working with first-time home buyers.
Same.
But a lot of first-time home buyers like to do not want you to pull their credit. That's the major issue, and I'm sure you hear that too. What I suggest to all my agents, and as I've explained to you, it's best to have the pre-approval process in place prior to putting them into your car and showing them homes. You may want to show them one home to get them excited. Yeah. But after that, they need to be pre-approved. And the biggest issue that I've seen in people who don't do that is that they'll go out, look at a home for $600,000, and find out they only qualify for $525,000. There's a big difference in the houses, $525,000 to $600,000. And then they get discouraged because they still got that $600,000 house in the back of their head, and they're comparing all the other houses to that. So that's the thing I think that people should do. I'm very big on being pre-approval.
And can you talk about? There's two sides of that, right? One, the what the FICO score is, but also that like you're doing a soft credit pull where you're only
Absolutely.
taking 1 to 3 points off of your credit score.
Not taking any points off at all.
Okay.
With the soft pull. That's the difference between the soft pull and the hard pull. The soft pull just basically it gives me the same information, but it doesn't push that information out to consumers. So I mean, not consumers, your creditors.
Yep.
So it doesn't ding your credit. Now, when I do a hard pull, when I actually start the loan process, different story.
And that's the pre-approval versus the pre-qual.
Yes. Actually, I can do a pre-approval with a soft pull.
Oh, wow.
Our company now allows us to do that.
Yeah, that's a big value add.
Yes, exactly. So once again, if they're concerned about their credit scores dropping, they won't have to worry about that. The biggest issue that I have is people will go out and says, well, I don't want you to pull my credit because I looked at Credit Karma and my credit score is 720. But when I pull it, and it's a different type of a credit report, that credit score could be as low as 680.
And that's the FICO score, right?
Yeah, that's the FICO score.
Okay.
And FICO scores have a bearing on what your interest rate will be, unless you're talking down payment assistance. The higher the FICO score, the better your interest rate will be.
The better your interest rate is for your FICO score. Yeah. And what are the big three major factors towards having a better credit? Like history,
credit utilization, collections and judgments. They will bring down your credit scores if you have collections or judgments or paperwork.
And like you said before, paying off those collections is more of a conversation between you and the consumer of like, is this one that we need to address now or wait?
Right? Exactly. You hit the nail on the head.
Okay. Exactly. Perfect. Other than that, do you mind telling everyone how to reach you and just kind of what the process looks like when you're ready to start talking about a home?
Okay. Once again, Asa Jenkins, Fairway Independent Mortgage. I can be reached on my cell phone, 720-366-0215, or you can go to my website, which is www.approved, by asa.com. And you can do an online application there as well, and it will notify me, and I will get back with you.
Perfect. Awesome. And again, I'm Kyle Gilmore, realtor here in the Denver area, and you can reach me through my cell phone too at 720-333-4434. I appreciate you, Asa.
Right. Thank you very much.
Till next time, sir.
All right.
Cool.